Ho, 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 everybody, and welcome to this probably final video I'm going to do this year. Got a lot to cover. We're going to talk about Bitcoin. Is it holding here at critical support, or is it breaking down? If so, how low? We'll look at total market cap and the key level that we need to watch there. Lots of other things. We'll look at the altcoins, and there's one in particular that's looking really good right now. Only one. So I'll show you what that is. We're also going to look at the FOMC, the reverse repo, a number of economic factors, and some other things that I think you'll find pretty useful, and no matter what level of trader you are at. So if you like the content, please hit like. It helps us get the word out to more people. One of our goals this coming year is to get this out to more people, hearing really good feedback, and that we're putting out really good information. So please and thank you. And with that, let's go ahead and dive in. In this chart of Bitcoin, where are we? Well, there's a reason why we've been range bound between here, and I'm going to get to that. This is actually because of the $3.7 billion options expirations coming to this week on Friday coming out. And because there's such a high volume there, the market makers and the derivatives players, we'll get into that a little more detail, are keeping the price in this range because, as we can see, and we'll look at, I won't pull up the article, but essentially the market dealers that are selling options, and if you want to come in and buy a huge amount of puts or calls, and if you're not familiar with that, put is where it's going down. Just think of call up, put down. And if you come in and you're a massive buyer of puts or calls, if you think price is going to go higher or lower, the dealer or the seller has to take the other side of that trade. So it's in their best behavior, or the best interest rather, to go out in the spot market and control price where the options are likely to expire worthless. And that happens on Friday. And so the majority of these options will expire worthless, kind of between this range of about 88K up into around 92K. So these sell blocks, this is one of our custom indicators that you can learn more about at cryptomastery.org. Not here to sell those today. I am going to tell you about some exciting options software we just released toward the end that I think this whole market dynamic has changed. We're going to be trading it a lot differently with short windows where windows of opportunity where we've identified with technology where those options are going to be most likely most profitable. Instead of buy and hold and getting liquidated in some of these high leverage trades if you're a day trader or a perpetual trader. So short explanation is they're going to keep price from going up here where the call buyers would be profiting with essentially a lot of leverage. So they are sellers in here. A lot of those calls would be in the money up in this range, so they're going to keep it down. And similarly, for those big put buyers that have expirations down in this range, maybe 80K to 85, the buyers are here. These green zones, which I have marked as support, we visualize the concentration of the limit buy orders on the exchange. So this is Coinbase. There's multiple layers of buyers all throughout that range. And I've been saying for some time now that this should hold. We found that this is very strong level of support, and where the buyers are, go figure. When they arrested the famous bank robbers, I think it was Bonnie and Clyde, and asked them, why do you rob banks? They said, because that's where the money is. So this is where the money is, and so if we do see a drop here, I think we're going to drift into Friday with not a lot happening, volumes down, not a lot happening in the markets, but after that, I think Monday we'll see. And I don't know that we'll get a holiday rally. Maybe there'll be some window dressing, maneuvering around, getting into Bitcoin coming into the new year. But I also think there's going to be a lot of tax loss harvesting, because the last thing you want to do if you're holding on to gains from this year and or earlier in the year and don't take your losses, then you're going to pay taxes on those. Whereas if you have some losses to bank, might be a good idea, not financial advice or tax advice, but might be a good idea to sell those, take those losses to write down your overall income in 2025. And you can always hop back in 2026, which I think is going to be a really good year once we get through the early hurdles and probably a decent correction. So we'll get to that. All right, spent enough time on that, but that's why prices have been going sideways in this range. Another day or two, and then we'll see which direction it takes. Probably, I wouldn't be surprised to see it sell off down to this 84K region, maybe down to 82K. If Bitcoin loses 80,000, then we're going probably to 74K, and there's a reason for that. I'll show you that in the next chart. Okay, so let's take a dive over in this deep dive into that. This is a monthly chart, and we can see a cup and handle pattern forming. So I have another chart that shows this also. If we do push higher up from here, and I don't think we'll get over 100,000, but if we kind of get up in that range and then break down, the head and shoulders measured move to the downside would put us down to around 50K and still hold this long-term trend line. But I don't think that's really going to happen. I think we'll probably hold in this range over here around 74K and 75K. We'll get to that in a minute, but on this monthly chart, a couple things to pay attention to. Bearish divergence has been clearly happening over the last 6 months since July. I'm sorry, this is the monthly chart all the way since 2021, March 2021. But recently, back in this range, lower highs on the RSI while we were pushing higher on price. Huge bearish divergence. We've been talking about that for a while. And on the weekly RSI, it's worth noting that we are kind of holding this downtrending channel here and trend line support resistance. But more importantly, that 44% and 40% level right in here has always acted as kind of an interesting level. All the way back here is support. And guys, kind of hard to see with the Santa hat on. But we can see that on the RSI coming down into support and breaking through there. But mostly the 44 region has been both support resistance, support, and support, resistance, support. So basically, we've broken down through that. I think probably we could head down into this 30 range. I have an alert, however, when we start going back above 44%, and that being bullish. I got the label in the wrong place here. So essentially, let me move that up right there. All right, so we're watching that on the weekly and the monthly basis. So in terms of money flow, also bearish divergence over the monthly time frame. Lower highs money flow has been going down, so no surprise there. And the same thing with stochastics RSI. The big one is the MACD. And on the monthly time frame, I don't use MACD very often. We have our own version that's simpler and I think a little bit better. But this is how I called the top in January of 2022 and publicly was pushing out in November, even a little earlier in October. I found a signal message to our M3 members saying, guys, I think we should start getting into cash here. This market's really looking overbought. And then we peaked in November and started heading down. And I was saying time to get out, but really pounding the table on that MACD cross over here when it flipped back. The histogram flipped from green to red. And sure enough, that was the top. So similarly, last couple months, we've been saying this doesn't look good. We're heading down. If we cross, then that's it. It's over. Sure enough, the top is in my opinion. Some people are still saying that we're going to hit new highs this year in 2025. They refuse to let go of that, but clearly that's not happening in the next week. That would take an act of God, I think. But at any rate, this probably is going to drip down for a while, and then we'll see some recovery in 2026. Lots of macro tailwinds once they get the Clarity Act and the market structure bill finally signed off on. But if you put the old seesaw in front of us, there's a big negative risk and a headwind with the MCSI announcement. That's the old Morgan Stanley index of some kind for inclusion into the basically the same thing as the S&P over here in the European market, and generally the S&P follows that. So it's big news. I think that is comes out Jan 15, and so they're battling back and forth. Michael Saylor, of course, saying that they're not solely a Bitcoin reserve company because they have a real business, and this is true. They service a lot of the Fortune 500 companies, but if they don't get included, there's potentially billions of outflows they could see and or future lost inflows, because if you're buying the S&P, as many people buy the index, that is automatically means going in and buying MicroStrategy if they make it in. I think they will. Even Amazon didn't make it right away. It took some time, but that's why I think it's a good idea to be out of this market and waiting to see what happens in January. So with that being said, let's jump over and we'll look at one more chart here on the way over to what I want to show you here. And of course, this is another study that we'll do first that shows the length of the market tops peak to peak. And so I had drawn this a few months ago and was kind of pontificating. Back here we had 49 bars, or 1,491 months. These are monthly bars from the peak in 2013 to the peak over here in 2017. From there to the 2025 or 2021 high, rather, that was a little bit shorter, 47 bars, 1,400 days. So the question is that I had was, would we go another 1,400 days like we did last cycle, or would we stretch it out and potentially get into December? But we now know that we came right into here to 1,400 days. That was the top kind of all through here. It's been topping. So the Bitcoin all-time high target, December of 2025, actually it was October 25. I had it over here thinking we'd probably stretch it out. So we can change that and change that to October. So basically, at least now we know these are still following the same timelines for the most part. Okay, let's take a look at this here. I'm going to come back to this actually, and on the dollar index here, so we have this long-term trend line showing the 3 and 4 year cycle lows. So if it can hold here and bounce off of there and head higher, that's generally bad for Bitcoin when the dollar starts to head higher. But as of now, as we can see this sort of zoomed in version, it's kind of holding there right above the 3 year cycle low. Now, if it breaks below that, I have an alert to buy Bitcoin. If we start breaking the 3 year cycle lows, potentially heading to the 4 year cycle lows, that would be very bullish for Bitcoin. So we'll be watching that. On the liquidity cycle here, we were packing a lot into here today. This is a study that I've been following for a while now. And as we can see, ignoring most of this, when liquidity bottoms is generally when we see breakouts to new all-time highs. So we saw it there, we saw it right there, of course back here, same thing, and recently up here. So, but it hasn't had that parabolic push up. What I want to call your attention to, though, is if I move all of that out of the way, this is the liquidity from the various central banks. And if we want to take a quick look at the legend here, we've got them all in reverse order, but People's Bank of China, Bank of Japan, the Fed, European Central Bank, etc. So we can see those all in here. So we've got its reverse order. So we've got Bank of England down here in the purple, People's Bank of China, Bank of Japan, European Central Bank, and the Fed. So what we see is we saw liquidity increasing starting back in July of 24, but then went down. It went down from October 24 down till around the beginning of this year, and we went up liquidity earlier in the year, but we've now peaked and it's kind of rolling over and headed down. So we just really need to see that liquidity kick back up, and then we can see the prices start to move higher. Okay, so the USDT dominance chart, this runs inversely to Bitcoin and crypto. We're in a danger zone here. The blue lines is a fractal from the last cycle. So if I just drag that over the last cycle here and the last cycle, this cycle here, what we're seeing is the yellow line is the median. And this is very good at reverting to the mean. Essentially, it's stable coin dominance. And since 2018, along this lower trend line, when it comes down, that's generally when the markets are peaking because money is flowing out of stables and into the crypto market cap and Bitcoin. So a couple examples here, right? And of course, this is Feb 20 and then 21. And we bounce off that, pushed up here as we saw that midsummer correction for Bitcoin around July of 21, if you remember that. And then money flowed back into Tether stable coins down here, out of there, back into the market, into that November high. And then, of course, pushed up, money flowed into stables, and that was the bear market. So I have these labeled in the same fractal here. So right now we're in crypto crash zone. Originally, I thought it might be like this. I was wondering if this would be, I was hoping we get one more bounce so we can see another all-time high around April, but it's not looking like that at this point. Not that these have to match up exactly, but important levels here, right along this 6.25%. Rejection here, resistance here, rejected there, resistance. And now we're above that, creating some support. So we're in this crypto crash zone. Have to be a little careful here. If we start pushing up, then we're clearly in the bear market, and that's going to have to resolve and then come back down. So that could see us peaking in around April 26. Now that's certainly possible because what happens in May, Chairman Powell is out. I've been seeing news today on Twitter and things that are not true, basically saying that they'll do a full 2-point drop as soon as President Trump announces his new federal chairman. Powell's still in till May. That his term is up until May. So nothing changes until then. The markets might front run that. But so let's say we see this big nasty crash and bear market, but then it resolves faster than normal, and we see this work its way back down as they start doing quantitative easing. And that's really the money printer getting going on and going burr. That's going to rally these markets and other stimulus if they can get to it. So lower interest rates is one part of that, but it's only useful, you know, if they're lowering the rates but it's only useful at a very low interest rate environment, like around 0%. That's why it worked so well back in here. A lot of factors here. I won't go into all of it. Some interesting new angles I was watching today from Raul Paul, the Banana Zone guy, basically saying he was wrong, which we already knew. The Banana Zone is delayed, and he's back on the 5-year cycle. But essentially because he thinks that the liquidity will actually start coming in 2026, but they're going to be doing it differently. Whereas last time, you know, the Fed came in and sort of gave this money to the banks and let the banks start buying treasuries, and the banks don't really want to do that now. Nobody wants U.S. treasuries. So he's suggesting that the Fed's going to just change the rules and let the Fed buy their own treasuries. So the infinite money game, certainly that would rally the markets quite a bit. But I trade what I see. Show me the charts. I'll tell you the news. I've been saying that for years, and I've been trading for 25 years. So anyway, let's keep going. I wanted to show you something else. Not show you that just yet. So let's see. Before we get into some of these things, I wanted to talk a little bit about options. There are now options on crypto. And so my business partner, one of my partners that creates our custom indicators that really are the backbone of our business and are excellent at finding these tops and bottoms, he's also been creating these for options and option spreads. So I had briefly showed that on the chart. Let me just jump over to that. Here it is. And essentially, this is an indicator. I'm not here to sell it. I'm going to tell you about one of the things we're working on. This will alert the exact buy, call, and put options spreads to put on. If you're not familiar with options, I'm the former founder of Options University. We taught tens of thousands of investors from 2004 till around 2013 when I sold it. The simplest way to do options is with option spreads. So if we see an alert here, this was a good one, buy the $118,000 call there and then sell the option up here and catch that spread. It limits your downside, it limits the upside, but it really lets you profit in that window without risk of liquidation. Now, options, of course, are time bound, so you have to get the window right. But these signals are triggering at the ideal time based on a number of things that I'll just show you briefly. But if you're interested in options, want to learn more about that, we're here to give you the tools to succeed in this coming market environment. And this is the kind of the page. We did a presentation on it yesterday. If you'd like to see that replay, you can go over to moonstream.io. I need to get the actual URL. It forwarded. So all right, I'll be pull that up for you guys. But basically, you can watch the replay, and it talks about this whole process that we have put together with this multi-channel radar. This is 10 different indicators, so it's only firing when they align. Things like VWAP, stochastics, momentum, money flow, RSI, our custom indicators, volume spikes, and giving it a total net score and a high probability for entering that trade. And then it also shows you the spreads to actually put on, which I just showed you on the other chart. So with that, I'm going to give you that link here. I've got to pull it up here from my other chat. But this I'm very excited about. So here you can see, it'll default to kind of buying this strike and selling one above there. That's going to limit your risk. The options you sell can pay for the options that you buy. So I won't get into option theory. It's all in the replay, but that's something that I would definitely look at here if you've got some extra time over the holidays here. And it is at moonstream.io/options replay. And that's going to look like this. There, options-replay. We'll put it in the notes in the video. So check that out. It's about an hour. Excellent presentation. People really like that. And we have a beta special here, and it's being called a crypto options spread scalper. All right, with that out of the way, I wanted to jump over here and look at some altcoins, and then we're going to jump over into some other news and some other things that you guys might want to see. So don't go anywhere. I'm going to be covering a couple of things like the reverse repo, and then also let's see, where is it? I've got a number of these windows open. We're going to jump into the Fed, the tools, crypto fear and greed, all of those things, and kind of revisit the rainbow chart, liquidations, and the heat maps, a number of things, a couple of Twitter posts. Okay, so with that, let's take a look at some altcoins. Things are not looking very good. Now, Bitcoin's technically putting in higher lows, so the next few days is going to be really important. On the weekly time frame, also lingering around a big sell block. So I do think we probably head down lower into that 74K range. Why 74K? Well, there's a huge amount of buyers down here. And if you'll remember, the inaugurating, the new president coming in, Bitcoin's never gone below the price of a new president coming in when he wins the election. So that's right in here, 74K. Remember, back in November 5th, that's when we broke above that level. And previous resistance here, prior resistance all the way through becomes support. So right in that range, again, I think that would be the low if we are going to get down to that point. But we'll have to see what happens. Anything, of course, can happen. And our signals, by the way, have really helped us get in and get out the right times all the way through this, including last cycle top and the bottom at 16.5. All right, Solana. Look, I'm a big Solana bull. The problem is they've been added to this lawsuit that they kind of slipped in, quietly slipped into the radar, where the pump.fund that both pushed Solana price way up, but also cratered it on the way down. Insiders are being pump.fund is getting sued by the government and the SEC, saying you guys manipulated this, and Solana has been added to that. So Solana potentially getting dragged into that, and it's a pretty serious lawsuit. I know there's a lot of bullishness out there on Solana. I'm a huge Solana bull. There was a big buy block, and I have recreated it here all the way through last year. And I doubled my Solana in my IRA, buying in this buy zone where the buyers were buying, selling, buying, selling, buying, selling. But this block has now been taken out. Those buyers are gone. It's telling me, and I was telling our clients, if we lose that 120 to 125 region, we're headed to $100 Solana. And we can see the sellers are starting to pile in right there. So Solana, I do think it comes lower. I'd be a buyer at Sol all the way down here. Lots of buyers in that $95 to $100 range. How many of you guys would like to buy Solana and just hold on to it? Probably going to 10x in the next 3 to 4 years. So that's my read on Sol. ETH looking a little bit better. I'm going to talk about the one coin I like a lot right now, and we posted in our member chats earlier today. We'll go look at that next. Ethereum in this downtrending channel, and we see lots of sell blocks up above. Certainly a lot of support here at 2750. But if Bitcoin can't hold 85K and goes down to 74K, I think ETH is going to come down around 2450. I'd be a buyer there on Ethereum. Right now, not looking so good. The signals are momentum signals. Short-term push higher, maybe. I'll turn on our early reversal indicator. This is an accidental discovery that I believe is finding institutional buying and selling. And then we couple that with our buy block here. So we could get a little bit of a bounce out of this, and also based on our trend strength indicator turning green. When it goes above 20, we usually see a multi-week push higher. It's been very steady up higher, and when it goes red, it comes back down. So you can compare that to the charts back in here. Great time to buy, to sell. And again, when they align, we see the trend strength indicator turning green out of a buy zone. Nice rally there, rolled over. And we've been out of ETH for a while now, but I think we could see a counter trend rally and then a deeper decline. All right, with all that negative news out of the way, let's take a look at my number one coin that I love the chart on. This is one of the nicest looking charts in all of crypto that I've seen for a while. Look at this chart on Zcash. Zcash previously pushed up to around 69700. I did take some profits in that region, and we've been riding it down and waiting for this ideal setup. We got in here a little bit, got stopped out. Beautiful setup though. Higher lows all through there. Price is back above the 21 and 50 EMAs, but this is one of our other custom indicators called the rocket. The rocket is a pattern I've recognized over the years. It generally precedes a fast drive up into the air like a bottle rocket that you might light on 4th of July. And you can see we've put an indicator on that showing the launch pad is the 50-day EMA right there. Can be the 21-day, but the key structure and the key formatting of that is you have the wick below, You have the real body sitting at an important moving average or trend line, and then this is the fuel of the rocket. So bottle rocket's a good example, or if you were ever like the Boy Scouts, you'd have those little rockets you'd hook on the electrodes, you turn the switch and it shoots way in the sky. This is what we see generally, and look at that, is now 15 minutes away from the daily close. Sometimes end of day these will sell off and the symbol goes away. If they close at or near the top with that wick below, the rocket's in play. So right now, very bullish on Zcash. Also, we have a buy block in here. This is where the buyers are. We can see that with our buy order block detector. No real sell pressure up until around this $600 level. So that'd be a nice trade. I think I'm buying in here. I'll add more on a breakout. I would also buy the pullback if we break above and retest before the resumption. Excellent looking trade on a risk reward ratio. It's anything over 3 is worth taking, and you know what, you could even tighten up that stop loss a little bit. I have mine at 399.50, just below the midpoint of this buy zone and this trend line. Real tight stop on that. So very bullish on Zcash, and we can also take a look at a shorter time frame. Here's the 2-day time frame, by the way. I've been playing around 2 days. About to turn bullish on this, one of our signals, and turned bullish back here with our early reversal indicator on the 7th. And then here our trend strength indicator green and our bullish divergence on our RSI Pro. If you'd like more information about these signals, they were created by my partner, a 25-year trader, quant engineer, and systems builder. Excellent, best signals I've ever used. When they align, they're like 90%. So we'll keep an eye on that. Here's a 1 hour, 4 hour chart on Zcash. And not financial advice, but here's the thing. Lots of bullishness in this chart. We have something called the dynamic average true range, and that has flipped entry mode, as you can see, along with this bright green. That is money flow. That is a buy block where buyers came in heavy earlier today. This is a 4 hour chart. So earlier today, you see this yellow candle, that's when it's showing a likely reversal. Like we usually see that first on the 4 hour chart. So seeing that very bullish. These are buyers that came in, not over the counter. Big buyers came in and bought Zcash. Most of the time, we always see at least that midpoint holding and respecting, and oftentimes the upper range of that, because when they buy a lot of it, they want to hold that price. So very bullish on that chart, as the money flow buyers and also the average true range turning bullish. And we love to see both of those happen at the same time. Right back in here, big money flow box. Buyers came in heavy on Zcash and they ran it all the way up to the sell zone. So I think that looks really good right here. So anyway, that's what I'm watching, and that's what we're watching as the only coin I like right now. All right, let's keep going. I wanted to keep this relatively short. In the news, we had some news today and jobless claims. It came in a little bit lower than the forecast here. Actually, I think I get it backwards. The joblessness was higher. It's kind of a double negative. Markets didn't really react that much. Initial jobless claims, they generally don't move the market too much, and especially on low volume right now. Not a lot of news coming out here until looks like another jobless claim end of the month. Not worried about that. Pretty clear calendar. FedWatch. Some people were saying that I've seen news that Trump is going to force another rate cut in January. It's not his decision. We know that markets are pricing at 84%, no change. So we'll keep an eye on that, but I don't think we're going to get another drop in January. Powell's already signaled that, so don't get too excited. Looking at the overnight reverse repo here, that's something to pay attention to, although not much to gather. The reverse repo has been depleted. And this is the overnight it's a tongue twister. Reverse repo agreements. The Treasury Secretary's Treasury securities, it's been a long day, guys, sold by the Federal Reserve on the temporary open markets. Now, it's not as bad as it seems generally when the market participants flag near the zero reverse repo down in here. It's a point where the Fed's balance sheet drawdown enters a new stage that needs closer monitoring. Reserves and funding spreads, as usage hits zero and signs of the stress appear. I'm looking at some other charts over here. The Fed tends to slow QT, which we just saw. We just ended QT, so that's good, but it doesn't mean QE has started yet formally. That gets back to what Raoul Paul was saying, how they're going to sneak that in, letting the Fed buy its own treasuries because no one else wants them. It's kind of like Mr. Wonderful on Shark Tank. I have a mutual friend. I actually ran into him in the Four Seasons not too long ago, and I said, hey, Kevin, my buddy says that you call yourself Mr. Wonderful. The reason you call yourself Mr. Wonderful is because no one else will. And he laughed and we had a little chat. But same thing here. Nobody else will buy these. So they're going to let the Fed start buying its own treasuries. Talk about infinite money printer. The key macro read here is that the easy incremental liquidity that markets had when the repo was down, the marginal change in liquidity is much more about QT pace and treasury issuance and reserve dynamics. I'm just reading some notes here. But the key is it just means less of a buffer. And it doesn't mean we have to panic just yet. So people are getting overly freaked out about that. The system is more exposed to surprise funding squeezes, and that would be the first to show up in repo spreads like the SOFR and the Bill OIS spreads and usage of the standard repo facility. Some big words there, don't need to get into it. So the key trading implication, nothing really. We need to see, we would need to see something break here. So I put it up here just because a lot of people are kind of worried about this. And even when we start to see these things push higher, it doesn't really apply to crypto. We don't know how it will apply to crypto because this was this was years ago. And actually, as it goes higher, we saw that bull run going higher in 2021. So we'll see. We'll see what happens. Kind of a nothing burger. On the EFT front, so Farsight investors, we haven't reported for today. Net outflows over the last few days, day after day. I think we're seeing rotation, end of the year, people are pulling money out to claim that tax loss. They're selling their ETFs and they're taking money out of the ETFs. Mostly BlackRock, as we can see, Fidelity a little bit. That's what happens when the customers pull their money. They have to then sell, and that's why it's pushing it down. So no surprise there. I guess we could look quickly at the ETFs for Ethereum, and mostly I want to look at Solana. Because Sol has been pretty steady on the inflows. It wasn't really selling off much at all. But similarly, so we're seeing, this is reporting, we're seeing a lot of net outflows. Not too bad on Ethereum. However, Solana, I think it had its first outflow on the ETFs the other day. And this is, look at that. We've got more players than we had 6 months ago. Bitwise, VanEck, Fidelity are the biggest. Now we have Grayscale, Franklinton, Templeton, and 21 shares. More are on the way, which is why I was so bullish on Solana to get ahead of the ETF bid. Hasn't shown up yet. But look at that. No real selling. We had 1 day of selling ETFs, and BlackRock sold 4.6 million there. And so not too bad. And so we'll see what happens. All right, enough about that. Fear and greed at 24 on the overall crypto market at extreme fear. Last week was at 16. That's when you really want to be paying attention. And usually the biggest pumps come out of that range. We can see that here. Again, there's another look at it. If we scroll down a little bit, when it gets oversold, the fear gets all the way down here. Generally, you see these start to bounce out. Similarly, when we get into extreme greed, that's when things start to reverse back down. So no surprises there, but we'll be watching to see if that can kind of get back up higher and money flowing back in. Let's look at funding rates. The problem is, one of the warning signs is funding rates are high right now. And the way to look at that is, let's say that you wanted to borrow leverage from one of the exchanges. You have Binance, OKX, Bybit, all of them have slightly different rates, but it's all supply and demand. If lots of people, lots of traders want to come in and they want to do 20, 50x margin, they have to essentially borrow that and borrow the money to do that from the exchanges. More demand means exchanges are they're gonna charge more. So with these all in red, even on the daily and the 7-day, means funding rates are higher than usual. And what happens is that becomes a target, and the bigger players, including these market makers, for sure they trade against their clients. Of course they do. It's make money 101. They're not regulated, at least until the market structure bill happens. I think they have some safeguards in there, but these exchanges are playing a lot of games. We've been seeing that on Arkham Intelligence, where they come in and they dump a whole bunch of crypto, and then they liquidate all these traders, and then they just come in and buy it back. But getting rid of the 150x, the 50 and 100x leverage traders really creates a more stable environment and better for us. Let's take a look at the rainbow price chart. Of course, this is the original one. I like to use the like the reverted one or the newer one on Blockchain Center here, and which keeps the price more in line in the rainbow chart. And we can see we've gotten into the extreme red in prior cycles in 2013. 2017 didn't get to the dark red. And this last cycle, we got into the bright or the dark orange, the blood orange twice. So it seems we could say that we're getting into one less level each time. So if that's the case and we got into the blood orange last cycle, even if we only get to the orange this cycle in 26, guys, we just haven't had that rip-roaring rally here. And I'd find it hard to believe we just meander through this. So let's say here's the range and the orange zone. That's would be from 191,000 to 245,000. Guys, I've done a really interesting study. I won't get into it here, where I think that the next peak is 245K. And if that's true, I think I know where the next market low will be, based on a fractal from last cycle. Spoiler alert, from the last cycle high back down to the 16.5 low on a Fibonacci retracement, guess what that number is? Well, it's not a Fibonacci number. It's exactly 3.14. It's pi, and I have two studies that show it was exact. If we go to 245,000 in the next cycle in 2026, the bear market low, I believe, would be 74K, because that is 3.14 from the high. This is dubious speculation, as Ben Cowan says, but hey, wouldn't that be cool if we figured out a hidden fractal and all that? Either way, the range that we should be heading up into is at least over 200,000 and up to about 249 in this bull run. Could it go higher? It certainly could. Maybe with all this legislation, maybe we push back up into the blood red orange, which is 250 to 329, and above that, guys, I don't think we're going to see that kind of pump. We're going to see probably a less volatile, put it that way, less volatile pumps and crashes. But still, we should be able to get up in that range with all of this money on the sidelines. There's tremendous money on the sidelines. And Raul Paul was talking about that. The rails are being built, but it doesn't happen overnight. These hedge funds and these big pension funds and even the big guys like at Merrill Lynch, they have to get in front of the RIAs, registered investment advisors, tell them to get on the phone and tell them to start buying. This takes time. And so once we have all the negative headwinds out of our way, we have money printing, we have liquidity starting to happen, quantitative easing, then we can see this really push higher. And I think that we will. Okay, guys, just to wrap things up, a couple more slides. Liquidation map. Now, these are the degenerate 100x traders, all these in orange. You can see that 100x leverage. So that's why prices moves around in this range to liquidate these guys. Why is that? Because what is the term I used earlier? The people that sell the derivatives, the people that are lending the money that would have to take the other side of that trade, right? They don't want to have that happen. There's an incentive for Binance to move price around and to have these other their unregulated exchange buddies to move prices around. And I don't know that they're coordinated. I think it's all in their best interest, because you see all those 100x traders on either side of the line here. But if they can move price back and forth and liquidate them, then they don't have to pay them. And 50x leverage holders. So that puts us between about 85K and about 90K to wipe out all of that leverage. And then even the blue ones here would be 82K to around 92K, which is around that number, would wipe out all that high leverage. Okay, and generally that's what happens, and that's a good thing. So anyway, looking at today here, we just roll over. We're almost over for the day. It's just before 7 p.m. So I'll go a little bit more. I want to see how that daily close happens and see. But Bitcoin has really not done much here. Ethereum down a bit. The market's just not doing much of anything. It is the holidays, and Christmas is tomorrow. So let's jump over to Twitter. You can find us at Moonstream Finance and over there or just x.com, Brett J. Fogel, my name. And you can look at some of here's the post about the biggest option expiry of the year. That is December 26th. Wait, this is wrong. It's bigger. It's not 23 billion. I think it's in the 30 billions now. It's gone up. largest in history. So we're seeing a massive concentration of institutional risk that will need to be repriced. Expect volatility. There's articles out there today. I think it's in the $37 billion range. Don't quote me on that. Either way, it's massive. So we'll have to see how that plays out. Some of these other charts here, these are older though. I'm not going to go down too far on this. This is one of the charts I was going to pull up here on Bitcoin. We did look at that here where it's still on that trend line. So we could get a bounce here. And the number of oscillators are oversold. So we could get a counter trend rally. I don't think we'll hit new all-time highs in the next 30, 40 days, 30, 60 days. So with that, a couple last things here. Here's more on that December 26th option expiration. And Bitcoin stuck between 85K and 90K for weeks. Now you know why. We just talked about why that is. And let's see, I get my tool turned on here. Covered that. Range has nothing to do with buyers changing their mind. These things never work when I need them to. There we go. It is option mechanics at work. We talked about that. Here's why. Let me just skim down. Gammas, Greeks, we don't need to get into that. Around 85K, which I just mentioned, sits the largest block of put exposure on the board. So you have a number of factors. You have the high leverage traders, and you have options and derivatives traders. So I don't know. Friday, probably they'll keep it right in that range. A nice quiet Friday, and then Monday we see fireworks when all those options expire. That's my read. We'll see what happens. And let's see. Yeah, this is what I said earlier. As spot drifts lower, dealer hedging kicks in because all of these bigger players, they always try to remain delta neutral. So if they have a huge exposure on stocks or spot market, then they are hedging on the opposite side with futures and derivatives, and they have a very small level of risk. So when as spot drifts lower, dealer hedging kicks in, forcing spot buying that absorbs the sell pressure, keeps price from accelerating lower. They're taking the other side of that. And all right, so that's about it. But basically every dip stalls because hedging absorbs it and they're buying it. It's not organic demand at all. They're hedging their own risk and becoming delta neutral. And on the other side of the above price, a 90K, the same mechanics for the bulls. Near 90K call exposure dealers forces dealers. Let me just explain that. Call exposure. So at 90K, the people that bought calls lower, maybe they bought a lower strike, they're about to be in the money, which means dealers, the sellers, have to then pay on that. Or what they could do is try to hold price and suppress price so that the options expire and they don't have to pay the holders of the call options. And right around 90K, which we can see. Just to jump back over there, and so it's not confusing there, this chart and this chart, going back to Bitcoin and pulling up that chart. We're almost done, you guys. And stick around because I want to give you we'll tell you about one other thing here, but right around 90K, 92K, right in that range. So they're going to try to keep that suppressed. All right, so with that, let's jump back over onto this, and where did that thing go here? So that basically at 48 hours is all over. The pressure is completely gone. Then we can see the true market direction. The smartest traders I know, they know when to stay out of the market, when to get in. And so this is a time to be sitting on the sidelines, except for Zcash. But maybe I'm wrong. This is confirming 23 billion. I think it's like 23.7. It could have gone up. But anyway, it's one of the biggest ones that has been we've had I think in history. So bigger players, bigger money. That's what's happening. No more forced buying below, no more forced selling above. That's the TLDR. Too long, don't read. Price stops reacting to hedging flows and starts reacting to real buying and selling again after the option expiration. So we kind of need to get through that. And so anyway, that's about all I wanted to share with that, and some more Christmas humor there, running through crypto Twitter a bit. Anyway, real quick, you guys, so make sure to check out what I talked about here. If you are interested in the new crypto options, go check out this replay at, where did I put that? At moonstream.io, moonstream.io/options-replay. It's about 1 hour and very interesting. We did this yesterday and a lot of great feedback. We are opening this up in beta, and that is the chart that I showed you where the technology is calculating the exact option spread to put on, and we'll even tell you in the course where to go. We're doing a 6-week training on how to do all this, what options are, but really how to focus in on and how you use the software. And this will be a $2,000 program in the future. It's only $697 until Sunday, you guys. And so options, I've had a lot of fun with options back in the day. I was trading options back in December of '99 when E-Trade was a green screen and a flashing cursor. It looked just like DOS, and was trading Netscape, Microsoft, and a couple others. One day there was a big breakout. I hit the bid, bought a bunch of options, doubled them in an hour. That kind of day trading of options is no longer available on the stock market. It's too much arbitrage and efficiency. But opportunity lies in inefficiency if you're early. And we're early. We're one of the first people talking about options on crypto. It's so early that many exchanges don't even allow it, especially in the US, but we know where to find that and where you can jump in on that. That's going to be a lot of fun. So go find out more about that at moonstream.io/options-replay. Or if you want to just go ahead to the order page, it's moonstream.io/scalper. Guys, I'm not here to sell you anything that you don't need. I'm here to give you the tools to succeed and win in the new markets of 2026. It's a different game. The market makers are different. They are advanced AI algorithms trading against humans. They've been learning humans for the last 4 years in these cycles, and they're really good at beating us because we're emotional. And I don't want to play that game anymore, especially with all the liquidity spikes, because that's that AI market maker moving price around to take our money. Mark my words. All right. So again, and then lastly, I wanted to share one thing with you. You can check this out. I don't have a direct link to this. It's all covered in the video. So go to moonstream.io and make sure to like the video if you got value out of this. It really helps us, and we want to get this quality information out to more people. We're serious traders, real traders. I trade every day, except when it's not a good market environment. But this is what we do. I've been doing it for 25 years. The only other thing I would share with you is if you'd like to have a free screening of a summit, a crypto summit that we did. It's 25 top experts that I interviewed with my business partner, Mike Newton. You can get that free 48-hour viewing at moonstreamsummit.com. And you have an option if you want to buy the recordings. It's like $27, you guys. And you can watch this little video here with yours truly, without the Santa hat, and learn more about this. But some of the people that we'd interviewed are leading experts. We had Mark Yusko. We had Max Wright, a number of people. Michael Hearn from Decentral. He did virtual summits on crypto, and I forget the name. It escapes me. But some of these experts, all of them excellent interviews. Again, Mark Yusko here. We had Lark Davis, Joel Coach K, Juan Villaverde is a big cycles trader. There's so much value in here. And it's a little over a year old, but they're still excellent. That's why it's $27. And you can check that out for free if you like. If you have some downtime here over the holidays. But either way, hope you have a great holiday. And thanks. Please leave a comment if you'd like us to cover anything else, or if you like what you saw here today. And with that, I'll leave you. And hope you guys enjoy the rest of the weekend. And make sure to check this out. It's about an hour long, really insightful. Best information you'll find out there on crypto options at this time. And those are going to be fun to trade in the next year. All right. Take care, everybody. Talk to you later. Bye.